Today, we will be taking a look at DraftKings, ticker symbol DKNG. Now, DraftKings is part of the online sports betting community, primarily. They also have a little leg up in the online gambling community as well. But today we'll be primarily looking at the online sports betting portion of their business. So if we take a look first at the chart, we'll notice that it has recently bounced off of this support line around the $35 mark. Now, if the market weakness continues, then I don't think it will hold for much longer before a breakdown and possibly a bounce later on. But if you've been following the online gambling sector, you'll know that it is increasing at a rapid rate, around 17% year over year. Which means the online gambling sector is in its infancy. So DraftKings is well positioned to take advantage of this market trend, leading to huge returns if you invest and hold for the long term. Now, online gambling is still only legal in a couple of states, and especially online sports betting. So it has increased from just a couple to more than 10 now. And there are many other states that are in the process of legalizing online gambling and sports betting, with only a few states that have banned such activities until 2023 or even later. So this is good news for online gambling indeed. But taking a look specifically at DraftKings, we'll see that they actually have quite a lot of market share in the sports betting industry. They aren't first, unfortunately. That's FanDuel with 29% of the market share. But DraftKings is not far behind. They have 28.4%. And of course, there's also MGM. But taking a look at the specific state breakdown, we'll see that FanDuel may be even further ahead than initially thought, with 40% of the market versus DraftKings 29% in the three largest sports betting gambling states. This article does, however, note that DraftKings has gained shares in all three markets, which is good news. DraftKings is also has a larger user base than FanDuel, which is surprising to me. So you might have to double check that. But if that is true, it will provide room for growth that FanDuel does not have. DraftKings is also in the process of buying Golden Nugget, another online gambling establishment, which could push its market share across that of FanDuel. Of course, I think Golden Nugget is primarily an online gaming company with real money, right? Online gaming gambling rather than online sports betting or online gambling, purely gambling, like blackjack or something. Now, in looking into DraftKings, I also noticed that there are a couple companies behind them. Yeah, so DraftKings receives their statistics, their sports information from two different companies. One called Genius and the other called Sports Radar. So instead of buying the company that the consumers are using to place bets, you can buy the company that supplies DraftKings with that information, which is an intriguing prospect. So if you take a look, Genius, the company Genius, has recently entered a long-term deal with the NFL. Whereas Sports Radar, the other company, has three other franchises mainly. The NHL, I think, the NBA, and NBL. Regardless, Sports Radar is the larger of the two, with more than twice, way more than twice, I think, the revenue and as Genie. They have more cash on hand. The cost of revenue is less. And even though the net profit is still negative, it is much better than Genie's, which is negative over 100%. So the thing is, Genie is sort of still burning money to grow their acquisition. Like, they are losing money on the NFL deal to gain more customers. It's kind of how they got DraftKings. But I guess this video isn't about Genie or Sports Radar. It's about dunking. DraftKings. Jesus. So again, it is a good position to be in long term, but if market softness continues, we may see a further decrease in price. However, that may only last until earnings, because in recessions, the get rich quick sort of thought process is exacerbated. Is enhanced. And so more people may flock towards online betting and boost revenues from DraftKings. So even though in the short term the stock price may drop and even may drop severely, I don't think it will be a long-term issue. Thanks for listening, and happy trading.